What's up, everybody? It's another late night walk. Trust all of you are well. We're here on East 56th Street and Park Avenue. And I feel as if it's been raining, I don't know, maybe like 3 days straight in New York. Hopefully the rain will subside by this weekend, but it's pretty much been raining nonstop. As always, we'll do a quick audio and visual check. If you guys could hear us and if we're streaming in 1080p, just give us a thumbs up in the chat and we'll get started here in a moment. As always, apologies for being late. It was definitely a busy night at the office. Standing outside of 432 Park. Pretty cool shot of 432 Park. And the Four Seasons Hotel. Okay, I think we can go ahead and get started. So good evening, everybody, and welcome back to Walks on Wall Street. Today is Thursday. It is August 8th, 2024, and it's been raining for almost 3 days straight here in New York City. We're now looking at the main valet to 432 Park Avenue. Beautiful, beautiful building, and I think this kind of like white speckled marble looks really, really good when it rains. We also have some pretty nice cars in the parking lot too. We'll be talking about a few things. It may be a shorter than normal live stream just because of the fact that it's so late. I was in the office late, so apologies for the inconvenience. But I think it should be a pretty decent and interesting stream nonetheless. Let's see who we have in the chat. Hey, Dustin, what's going on? I see New England Crypto is here. Flat Smack, Lance, Ali Star, Professor Dario. Cheers. Lost Not Yet Found, Shannon, Dale, MD. Alan is here. Hey, what's up? Everything in Miami. Good to see you. Now, assuming everything goes to plan, I should be flying to Miami Tuesday, maybe Tuesday morning, maybe Tuesday afternoon. It just depends. So I know that Miami's been getting a lot of rain, and I just looked at the weather report, and it looks like there's some sort of tropical depression or tropical storm that is brewing just off the coast of Miami now. So hopefully when I get there, we won't have any more rain in Miami. I feel as if this has been one of the most rainy, particularly for New York, it's definitely been one of the most rainy spring and summer that I've ever been through. But according to the weather report, it's supposed to clear by the weekend. So we'll see. We'll see. Jeff in Southern Tier, New York. Good to see you. Now, it's pretty much a bounce day across the board here. Some pretty encouraging action. However, usually when the market kind of bottoms like this, you usually have at least 1 or 2 more days of kind of like a shakeout or a sell-off. So I wouldn't be surprised if we have 1 or 2 more days coming up here of volatility. But I think that low on the S&P, the NASDAQ, and the Dow, I think that is the low for the year, if I had to be a betting man. Same thing for Bitcoin. I think that has bottomed. But we need just a few more days of shake, and then I think we'll be good to go. Let's walk a little bit down Madison Avenue. Very, very seldom do we walk all the way down Madison. Yeah, New England crypto, Bitcoin. We just need to get back above the 200-day. Now, Bitcoin is above, 62,000. So it's had like a 20% rally from the low. Now, during that mini kind of crash, I think it would probably fair to say to call it. The only thing that I bought that day was Bitcoin. So definitely feeling well. But again, like I said, usually there's one more shake before the market resumes its uptrend. But we'll wait for the light here and then we'll cross. Now, what's interesting is if you look at all the major indices in the United States, the S&P, the NASDAQ 100, pretty much all those indices just came straight down to the 200, particularly if you look at the futures. Nobody was just expecting that it would get there in 2 days, right? But sometimes those things happen. So in bull markets, there's usually 3 to 4 corrections over the course of 36 months to the 200. And I believe that that's what it was. So we'll keep our eye on it. I think a lot of people are caught off guard. We looked at a lot of the sentiment indicators. The VIX is coming down, which is great. And there's still a lot of people that are negative on the market, which is very, very good news. Very good news. Now, speaking of the markets, this is 54th Street. And right across the street is Jefferies. This is a boutique investment bank. Has a very interesting building. The CEO is a pretty cool guy too. He's a good follow on Twitter, Rich Handler. And I believe he owns like 10% of the company. Now, out of the financial sector, Jefferies has actually been one of the top performing stocks. A lot of the boutique investment banks have been performing quite well, like Evercore, Jefferies to be, for example. So I think the guy added probably, maybe $1 or $2 billion to his net worth alone this year, just off of the common stock that he owns. Kind of wild. Hey, Melee, what's up? All right, let me read some of the comments here. Troy Atman says, Tom, do you anticipate any specific moves due to the mortgage rates finally starting to drop? Home builders, maybe? What should we be looking for? Well, I think overall, and I'll start off by saying this. The markets are designed to fool the vast majority of the people, the majority of the time. So many people out there think, with mortgage rates coming down, this could potentially cause a stampede into the market and you'll see prices being bid up. I'm not too sure that that's going to happen. I think you'll definitely see more transaction volume pick up, but it may have the inverse effect. If anything, I think you may see a little bit more or an acceleration of pricing weakness, which I think is actually good. That's a good thing. And it really comes down to basic supply and demand. So what do I mean by that? Well, there's a lot of would-be sellers out there that have not listed their homes for sale because they're very, very protective over their current interest rates that they hold on their mortgages. And they're like, well, I don't want to go back into the market and even if I sell my home, right? I don't want to go back into the market and buy something else. And if I need to finance it, I'm going to be paying double the interest rate. And probably my payment will go up maybe 25 to 50%, maybe even double. So potentially what may happen is as rates come down, sellers will feel more comfortable to put their homes on the market. You may have an increase in supply broad-based, and buyers will have more of a diversity of choice. And that could continue to soften prices, which I think is a good thing, Already, and I could speak for New York and Miami, particularly the tri-state area, I could speak for. You're already starting to see some real softening here. Things are starting to sit on the market a little bit longer, and sellers are coming to terms with the fact that if they want to move their property, they want to move their product, so to speak, they're going to need to be willing to negotiate a little bit, right? Need to be willing to be a little bit flexible. Now, on the back end of that, that could potentially be good for inflation. I'm just trying to play devil's advocate here, because no one really knows what's going to happen, right? I think if somebody tells you, I know 100% that this is going to happen, it's just impossible. The best to do it are right only about 50% of the time. But what could be interesting is, it's true that we've had this massive move into the bond market, right? Cash flying into bonds, rates dropping. On one side of the aisle, people think that this is going to cause a major spike and an increase in inflation, particularly if the Federal Reserve comes out with an emergency rate cut, which I don't think they'll do. But this could have the opposite effect. This could actually lead to the further acceleration of CPI coming down, because a major component, roughly 40% of CPI, is made up of shelter costs. And if we continue to see supply bleed onto the market, well, basic laws of supply and demand, buyers have more diversity of choice, prices continue to soften. So maybe this is good for the Fed's overall mandate, just to kind of let the market rock. Let's actually go this way for a second. We're going to go in front of the St. Patrick's Cathedral. I don't know, what do you guys think? Any thoughts? Hey, what's up, Doc7? GG NYC, Esmeralda is here. Flats Max's corporations shouldn't be allowed to buy residential homes. They are the reason so many people live in tents. I disagree with that a little bit. The narrative that, BlackRock and private equity is out-competing the vast majority of first-time home buyers, it's a little bit misleading. It does happen in some cases, but the vast majority of single-family home owners are mom-and-pop landlords. Now, I'm not saying it doesn't make any impact at all, right? And that's definitely up for conversation. But, there's also a lot of companies like Invitation Homes, I think is another one. Or they may be the biggest. I don't know. Maybe you guys could Google this and we can kind of discuss this on live stream. But Invitation Homes may be one of the larger REITs that own single-family homes for rent. But I also think they sometimes do deal structures where it's like a rent-to-own type scenario. But we'll see. I'm just not in favor of the government mandating and really getting too involved with the business. Usually what happens is the more government regulations and kind of red tape they put on things, the more expensive they make it for people. But it is possible. It is possible. Hey, Trade Brigade, what's going on? Good to see you. Showed a little bit of progress today in the market. I think particularly with Bitcoin, back over 62,000. Now what I was saying is usually what happens, right, when you have these kind of flash crashes like this, and I also want your opinion. So I posted something interesting on Twitter today, or on X, and it was regarding Japan, in relation to Japan. So if you pull up the indice, the 225, as we're here on East 50th Street, and I want you to pull up a monthly chart of the Japanese equity indices. And obviously everyone knows Japan topped, right, put in a generational top in December of 1989. And 2 months ago, for the first time since 1989, so it's about 34 years, Japan briefly punched a new all-time record high for their stock market, right? And then it proceeded to go through that flash crash. You know, the big headline was the worst day for Japan in history, the history of the world. This was the worst day for trading. However, if you kind of zoom out, and you know, this is just based on chart reading for a second. When you have those massive cup with handle patterns that form, you usually get a big reaction on the first test of a previous all-time high. So if you zoom out on a monthly, this actually looks like a normal run-of-the-mill shakeout from the first test of the 1989 high. And then if you zoom in a little bit more on the weekly chart, you go to the weekly chart and you put a 200-week moving average, you'll notice the exact wick, the exact low wick, hit exactly on the 200-week. So it's very possible. Now, I'm not calling a bottom or a top, but maybe in 6 months, I wouldn't be surprised if we see a headline. You know, Japan, new record highs, equity indices, Nikkei index, new all-time record highs. A complete 180 from not only what's going on right now, where everyone's freaked out, right? If you look at any of the sentiment on CNBC, on Bloomberg, on X, Twitter, whatever you want to call it, regarding Japan, it's all how it's all about how the country is going to collapse, it's going to fall apart, the yen is going to unwind, population collapse in Japan, and how the country is pretty much going to fall apart. But if you've been paying attention, Japan has been in a screaming bull market for 4 years now. And call me crazy, right? Call me crazy. I think that that's going to continue. So we'll keep an eye on it. And maybe in 6 months we look back and the Black Monday event, which was the worst performance, right? The worst one-day percentage drop in history, could have been the shakeout that formed the handle on the 34-year base. We'll see. Kind of interesting. Here we are, Rockefeller Center. Just a bummer that it's raining. Hey, D, what's up? B Cruises, am I going to buy Trump coin? I don't know what that is. Trade Brigades is reasonable take out of the index. Yen pressure for U.S. equities. Market feels different, as it's more about actual leverage, not about the actual economy. Yeah, it's going to be interesting to see. I mean, just from a chart reader's perspective, right? If we take all the fundamentals out of it, and assume you don't even know what you're looking at the moment, right? But just zoom out on a monthly chart of the Nikkei index. It looks like the most perfect, you know, cup with handle base ever. Now, additionally, here's what I like to call the three. And again, we're going to kind of deviate from fundamentals for a second because we always are so focused on fundamentals, but it's also important to focus on technicals as well. There's three specific assets that look really, really freaking good on a monthly time frame. I would say number one is gold, right? Throughout all of this crazy volatility, gold has been flat to up. I think gold was up today over $2,400 an ounce. This is kind of a cool viewing party here. at Rockefeller Center. Anyway, I think gold looks really good on a monthly. You have Bitcoin looking really, really good on a monthly. And then Japan looks really, really good on a monthly chart. The Nikkei index looks great. So we'll see. It'll be really, really interesting. Flat Smax's gold is 24.26. Got it. I wouldn't be surprised if, over maybe the next 12 months, you start to see gold approaching 3,000. That is not unrealistic. We'll see the Olympic rings and then we'll head back down. I haven't been watching much of the Olympics. Hey, Cynthia Ava, what's up? Arun C, cheers, good to see you. Hope you're doing well. Speaking of companies who are doing well, American Express has been a top performer in the fintech type of space. They've been doing really, really well. Had a good quarter. Stephen Bate, what's up? Someone's asking about the Federal Reserve. So here's the thing. What is also good is to kind of reflect, and I posted a series of tweets about this over the course of the last few days. Usually when we have any type of major volatility in the market, I would say the last really 3 major events, and I'm talking like major events, was 2018. I remember that vividly. I remember where I was on the 2018 sell-off into Christmas Eve. Number 2, obviously COVID-19, right? That was nuts. I remember exactly where I was when the market was hitting circuit breakers. And then this last Monday, August 5th, right? When Japan was kind of unwinding. And I always try to take a little bit of a pause and do a screen capture of my timeline. Particularly on X, but also I keep a mental note and an archive of all the text messages I get, all the emails I get, and all the phone calls I get. And it's always kind of like the same group of people who are hammering me right when the market is unwinding, and they've been a really, really good bottom signal. Some of which are friends from college, some of which are old coworkers, and some of which are people in my family, to be quite honest. Some of them are trolls from YouTube, right? That'll write me unhinged emails saying, I told you so. I've been in your chat every night. I told you the market was going to unwind, and you're leading everyone into a slaughter. Granted, we've been max long this market pretty much since the bottom of 2022. But it just goes to show that the strongest indicator in the market is not how people feel about the economy, is not how people feel about fundamentals of the business. It's really the emotional aspect. And it was on full display on that Monday. There was mass selling, huge outflows out of ETFs, retail panicking at the bottom. Now, I'm not saying the market can't go lower, but generally speaking, when you have a situation where the market's unraveling in that magnitude, hitting circuit breakers, probably not a wise choice to get short that. right? Particularly as the VIX was going to Mars. People were buying put options when the VIX was like 60. Now the VIX is what, like 20 something, 27, something like that. I mean, so even if you're right on the direction of that, you could get killed on the vol crush and make no money. So it's just important to kind of understand those market mechanics, let cooler heads prevail. And it's going to sound wild, but oftentimes the best decision to make, I'm not talking about when the market's selling off and in a structured way, but when you have circuit breakers, everyone freaking out, sometimes the best thing to do is just chill. Because you're going to get crazy 100-point swings in each individual way as the algos fight it out, as hedge funds are blowing up. Hey, middle-aged grind, what's up? Yeah, it should be interesting to look back 25 years from now for sure. I mean, even looking back on the COVID crash, now it just looks like a little teeny blip on the radar, which is wild. But if you can really, really remember where you were when the market was hitting circuit breakers, I remember where I was. I was right in this building right here, in the Marsh McLennan building. We had one of the top quant hedge funds in our building, D.E. Shaw. Not sure if anyone's heard of him, David Shaw. I was sitting right there at 1166 Avenue of the Americas. Circuit breakers going off. People were evacuating the office because everyone thought we were going to die of the virus. Turns out it was all bullshit. And the economy roared back. And the market roared back. Yeah, Trade Brigade, that's true. Jeff Bezos, that was his first job out of college. Working for D.E. Shaw. Now, you know what also I think about? If the global economy, and we'll kind of go global macro here. If the global economy was able to survive, and there's some nuanced debate, right? Of course, there was a bunch of fiscal stimulus. Of course, there was a bunch of monetary stimulus. Of course, I'm one of those end the Fed guys too. But there were very, very respected people on Wall Street that thought this was it. That thought COVID-19 was done. That would just killed the economy. And to really have a 180 like that, and quite literally set off what we now have, this technological revolution with AI, that was spurred by a lot of that fiscal stimulus and people being forced to work remote, right? And at the time I was in tech sales, and it was just like you were order taking because everyone was trying to set up a virtual infrastructure so their employees could work remote. Everyone needed new laptops, everyone needed new phones, everyone needed cybersecurity software, everyone needed a CRM. It was just probably 5 years worth of tech spending condensed into 8 months. That's literally what it was. So there's an interesting quote that I always like to keep in mind because it's so true. And it's that the market is designed to fool the vast majority of people the vast majority of the time. Elon Musk always says, and not as it relates to the market, but just as it relates to life, what does he say? Usually the most entertaining outcome is the actual outcome. That's kind of my thesis on Japan. It's like you read all these Twitter threads, you read all this fear. These people are like, we're not even close to being done with unwinding the yen carry trade. These are going to send banks to zero. And when you take a step back, you're like, yeah, probably not. Probably not. It's probably going to be just like every other crisis where you have funds blow up. I still think we're going to hear some news down the line that some big firms blew up their entire currency trading desk, and it's quite possible. Now again, not a guarantee, obviously, but it is quite possible that by this time next year, we're talking about new record highs on the Nikkei index. Hey, Brad's Brain, what's up? Good to see you. David Purcell, cheers. Hanksters, trillions pumped into the economy. Yeah, probably several, and probably shadow currency that we don't even know about too. KML says there are still underlying weaknesses in an economy where Wall Street successes aren't reflected on Main Street America. You're 100% right. And that's why there's the old saying, the stock market is not the economy. That's so true, KML. That's so true. That's such a great comment. I'm so glad I brought this umbrella. I was just about to walk out of the office without it because it said there was a 20% chance of rain and now it's pouring. But yeah, what KML said is totally correct. The stock market is not the economy. And to his point, since the bottom of the 2008 financial crisis, where the Federal Reserve had to bring interest rates to zero and leave them there for a decade, what we call the decade of ZIRP, right, zero interest rate policy, that created a very lopsided recovery, right? Yes, it's true that unemployment has remained at record low levels. That's true. Hold on, let's cross here. We'll wait for all the foot traffic to go by. And yes, a historical trend of inflation, if you look at CPI, has actually been running below trend for most of the last 12 years. However, where you have had inflation, or what I like to call shadow inflation, is in asset prices. So if you look at a chart of the S&P 500 since the 2009 lows, right, on a monthly time frame, it's pretty much from the bottom left to the top right-hand corner of your screen, right? Generally speaking, yes, there's been corrections. Now that's good, right? Because anyone who participated and who have owned stocks have done really well. And anyone who has owned their primary residence, or maybe you own just rental property, you've probably done really well because prices of real estate has gone up. But if you look at the breakdown, I think the top 10% of Americans own 90% of all the assets. So it's been a very, very lopsided recovery where you have the extreme haves in the country doing extremely, extremely well, and then pretty much everyone else. That's really, really true. Look at this Steinway piano. This is a beautiful color. It's almost like, I don't know how well this comes out on the stream, but it's almost like a reddish color here. It's really nice. It's like a deep reddish brown color. Hey, what's up, Hanksters? This is what about the $1.3 trillion in all-time high credit card debt and the delinquencies too? Yeah, that's definitely a concern, and we've written about that 2 newsletters ago. Now, what's very, very important to look at, and this is very easy, and I like to look at 3 things specifically: Bank of America, American Express, and JP Morgan Chase. Those are really the 3 that I like to look at. And if you just go to their investor relations page, they actually publish their 30, 60, 90-day card delinquencies. Now, it's true that they're trending higher, right? So more people are falling delinquent on their bills. But it's just gotten back to pre-pandemic trend just now. Maybe like a few basis points higher than pre-pandemic trend. So I would say it's not at the levels where we need to, panic and freak out yet. But it is at the level where we need to understand and really, really pay attention. Now, there's a few ways you could look at this, and I'm really glad you brought that up. Most things, right, and this just isn't in asset prices, this is in anything in life, most things tend to mean revert. Has anyone ever heard that terminology before? Mean reversion? If you've taken like a statistics course or something like that, you've probably heard of that. Usually things over time tend to revert back down to the mean. So you have extreme blow-offs either way, but over long periods of time, things tend to drift back to the mean. And in my view, and maybe you call me a perma-optimist, a perma-bull, whatever. I would say I'm not a perma-bull. I just, I'm willing to change when the market changes. However, if you look at three main things. If you look at the trend of credit card delinquencies, that's just back to mean reverting to what it was during COVID. Obviously, when the government gave out massive fiscal stimulus, when the Federal Reserve was doing quantitative easing, it skewed it to the downside because everyone was flush with cash, they were paying their bills, and everyone was, generally speaking, having a better time about it. But now, when you're starting to see those tail effects kind of dwindle, you're getting back to normal. Additionally, you're seeing the same thing right now with unemployment. So the unemployment rate, after being literally bottom tick, rock bottom, we're starting to mean revert. As well as the overall total number of unemployed people in the United States. I think it's a little over 7 million. And if you look at these charts over the long period of time, it almost has a correlation with the VIX, which is very interesting. So if you type in on Google, unemployment rate in America, right? It should give you three specific categories. It should show you the unemployment rate, it should show you the labor force participation rate, and it should show you total number of unemployed people. And you'll notice that generally speaking, you have these big blow-offs around some sort of crisis, like the financial crisis, COVID, and then it usually reverts, back down to the mean, which I think it's what's happening now. Hey, Doc7, what's up? This is the H&M building. This is where NASDAQ is. I also think BMO Capital Markets are in here too. This is the ball that they drop on New Year's. That's at the top of One Times Square. I don't know. I mean, what do you guys think? Do you think that this is something more is brewing? I mean, what are your thoughts? I'm actually more interested in what you guys have to say, as opposed to me. Now, you know what would be interesting? Speaking of debt, we could actually go look at a live number of not only the U.S. national debt, but each individual household's personal share of the debt. It's on the clock right here. We might as well cross the street and check it out. Someone says 240K. I think it may be a little bit more than that. I mean, maybe you're right. I guess it doesn't matter, right, at the end of the day. At this point, I feel as if our debt levels have gotten to cartoonish numbers, where it's just too ridiculous at this point. right, we'll take a quick look at the debt clock, and then I got to head home, so we'll head back down. Robert Parker says President Biden just pulled out of the race. Yeah, I don't think that's really going to affect the markets too much because, I mean, everyone who is honest, right? If you're just an honest person and, you know, you're not ultra left wing or ultra right wing, everyone knew the guy wasn't gonna make it to to election. I mean, this is quite obvious. All right, this should allow us to get out of the rain a little bit and check out the debt clock. If you ever want to see it and you're in New York, it's right here. Brad's Brain says, I think it did, Tom, with Biden, a Trump victory. It was a lock. Harris came in with the bounce. And media, and it put a scare into folks. Maybe you're right, but I think they're both big spenders. All right, I'm not even smart enough to know how to read this. So 34,384,652,465,234. And your family's share is $356,100. It's pretty intimidating. Now, who thinks, I think this is an interesting question. Who here thinks that this debt clock is soon to be obsolete and we need to add another column here? What do you think? Hopefully not. I don't even think that's possible, but man, that's what I'm talking about when we're saying cartoon numbers. I mean, it's like, I don't think people really understand how much money that is. First of all, that much money doesn't even exist, right? So this is kind of a good synopsis, because when people say, I don't want a digital dollar, well, there's definitely not $34 trillion worth of currency that's physically available. Okay, probably not even half that. So it's all digital. It's all just digits on a screen. Crazy, right? 34 trillion, wow. That's wild. David Purcell, at what point does this start to matter? It seems surreal. It does kind of seem surreal, doesn't it? Now, my honest answer is I don't know. I don't think anyone knows, right? If we ask ourselves that question, at what point does this matter? Nobody really knows. You had people thinking that the market was going to crash, that global central banks were going to dump U.S. Treasuries, that China was going to dump U.S. Treasuries, everyone's going to move away from the U.S. dollar, and the U.S. stock market's going to crash. People have been saying that, everyone, for 10 years. Okay, so I don't really think anyone knows. Now, I have an opinion, but my opinion doesn't matter. I mean, my opinion's as good as anyone else's here. I'm not, Nostradamus. But I would say, if I had to guess, and put your guesses in the chat as well, Undercover Cop, I think it starts to matter once the US dollar is not the world's reserve currency anymore. And I don't think that's going to happen anytime soon, to be honest. I think the reason why we've allowed, right, deficits to get out of hand is because the US dollar is the world's reserve currency. If that changes, I think that's going to be a bit of a problem. But so long as that is true, I mean, unfortunately, I think our representatives will continue to spend into oblivion. Hey, Carol H., what's up? Carol, I'm probably going to be in Miami on Tuesday. Looks like they're chasing somebody. But I was going to go to Miami last week, but there was too much rain and the flights were all crazy, so I may go Tuesday. So looking forward to that. Tim says our markets are all tied to world economies. Flat Smack says as long as Bitcoin is priced in fiat dollars, it will literally go up forever. Technically, you're not wrong, honestly. I mean, that sounds like a perma-bull crazy thing to say, but that's actually not wrong. Now, obviously, Bitcoin will fluctuate over time. It'll go down, it'll go through bear markets. But like I always say, Bitcoin priced in dollars or priced in fiat currencies, right, could literally go to infinity. Literally, against some fiat currencies out there. Now, who was the last president to actually balance the budget? Was that Bill Clinton? I think some of you will have to help me out with this one. Doc 7 says petroleum is the key to the US supremacy, the petrodollar. That's also very true. Very, very true. And I would say more broadly, Doc 7, the US dollar is backed by the might of the US military. A lot of people don't think about it like that, but that's very, very true. The US dollar is backed, because people say, oh, what's the US dollar backed by since we got off the gold standard in 71? It's not backed by anything. Well, it actually is. It's backed by, you know, an entire nuclear arsenal, a bunch of F-16 fighter jets, you know, A-10 Warthogs. It's backed by all that. Whether you like it or not, that's the reality of it. KML says, yes, Clinton, but it was only under GOP pressure. Chatster says, then George W. Bush pissed it all away. Joey says, Clinton. Yeah, I thought it was Clinton. Kathleen says, Clinton. Got it, got it. One other thing I'd like to say about the debt. It almost kind of applies, if anyone here works in tech or works in software, or just understands like exponential growth trends, usually a startup will kind of follow an S-curve, right? Where, you know, you'll have not a lot of progress and then it just goes off on one. You'll have this huge tail. That's what we're experiencing with the US debt, by the way. I'm not sure if this number is 100% correct. So you may need to Google it, but it's something close to this. 90% of all of our debt has been racked up since COVID, I think, or a large portion. It's something like that. And at the rate we're accruing debt right now, it's roughly $1 trillion every 100 days, which is just totally bizarre. I mean, think about that. $1 trillion every 100 days. It's almost like what is even money anymore? Like, what does it even matter? It's like, why not just print $100 trillion then? It's crazy, right? Brad's Brain says lots of music tonight. You know, I'm quite surprised by how busy Times Square is tonight. Like, look inside all of these restaurants. Pretty much everything is packed. Seems like tourists are still out spending money. I know 10 Red Buff says Red Lobster is still open in Times Square. That is true. It is still there. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these live streams every day starting at 8:45. You know, even this Margaritaville is packed. R.I.P. Jimmy Buffett. NBA Elias, Japan holds $1.15 trillion of U.S. Treasuries. It's pretty unreal. Now, you know what else is unreal? An interesting fact that I saw on Bloomberg this week. I believe now, since Berkshire Hathaway sold about 60% of their Apple stake, Berkshire holds more treasuries than the Federal Reserve, which is crazy. It's crazy, crazy, crazy. This is 40th Street. Since we have the light, we'll go this way. And then we'll head down later. Hey, David Ennis, good to see you. Hope you're doing well. CJ says Delta versus Microsoft, like Delta Airlines? Look at this Cybertruck. Let's follow the Cybertruck. So the 99-cent pizza is now $1.50. They haven't changed the light sign. It's packed all the way down to Penn Station, too. Mr. Martinez is the 99-cent pizza real? Well, a lot of them have been raising their prices to $1.50, which doesn't seem like that much, but on a percentage basis, that is a lot. James Bond says, can you walk the Manhattan Bridge? Yeah, maybe we'll do that tomorrow. It's just the weather's been so piss poor and I've been working late. But tomorrow, yeah, for sure. I'm gonna try to make a point of it tomorrow to start the live stream off in Soho so we could just blast all the way over the Manhattan Bridge. You know, to think about it, we haven't been over the Manhattan Bridge in a long time. So maybe Friday, holy crap, tomorrow's Friday, it's nuts. So maybe tomorrow we'll do the Manhattan Bridge. Saturday, we'll do Brooklyn Bridge. Sunday, we'll do a combination of the Staten Island Ferry and the Williamsburg Bridge. Weather permitting, of course. Hey, Jose V says, do you think we are looking at any rate cuts headed into the election if any specific candidate is nominated? Do you think we'll see a significant difference? I mean, now there's a difference. I have two takes on this. What I think they're going to do and what I believe they should do are two different things. Now, if you type !CME in the chat, !CME, it'll bring you to the Fed Watch tool. And I think it's almost about a 90% likelihood that we get a 25 basis point rate cut in September. Now, there's been many pundits on CNBC and Bloomberg coming on the TV after we had that, mini flash crash in the market, panicking and freaking out, saying that, oh my God, the Fed needs to come in here right now and do an emergency rate cut. I totally disagree with that. If the Fed were to actually come out here, let's say like a day after we had that flash crash, and announce that they're doing an emergency rate cut, the bottom would have fell out of the market. You probably would have seen, the Dow down 5,000 points, because that doesn't signal confidence in the market.
It's right there.
Right? Panic doesn't signal confidence. You kind of got to be cool, calm, and collected here. So I think Fed Chair Jerome Powell will continue on his course. Maybe he'll have 25 basis points worth of rate cuts in September. But, and I'm going to use the term technically. Technically, the Fed is not supposed to be, putting a put under the market, right? Like they call it the Powell put. They're supposed to act independent. They're not supposed to, save the market. They're supposed to make sure that inflation comes back down to their 2% mandated target and maintain full employment. Their job is not to kind of coddle the market and make sure that the market's always up. That's not the purpose. So, if we look at futures, it's looking like we'll get a 25 basis point rate cut in September. But I don't even know if that's the right thing to do. We'll see. What do you think? Do you think we'll get something in September? Hey, Mark Summers, what's up? Slow Tom and Chat checking in late tonight. Now, Mark, you're a real estate guy. Give us an update if you want on kind of what the market is doing in Arizona, because we spent, I think, the first 15 minutes of the broadcast kind of talking about, we've had this massive movement in the bonds, right? There's been a huge rally in the bond market, putting downward pressure on yields. And a 30-year fixed rate mortgage is at the lowest rate, I think, in a little over a year. So do you think that's going to cause a little bit of softening in the market? Do you think that's going to kind of pull sellers off the sidelines and have them list their homes for sale? What are you seeing over there in Arizona? I'd be quite interested to hear your perspective on the market over there. Alan says, how long do you think rates need to remain elevated? I feel like it's been long enough. Well, the thing is the market, excuse me, the bond market, I'm just going to open up the umbrella again. The bond market has actually been pricing in cuts, so rates have been coming down. So you should see that. If you're in the auto industry and people, are looking for, financing, those rates should have, technically come down, all but a little bit. So we'll see. Hey, Brian Pro says we're putting our home for sale September 30th. Very nice. Keep us updated. I'd be interested to see the demand that you have. Hankster says, Tom, I'd love to move out of state. However, I'm not giving up my 2.875% mortgage for 7%. See, and a lot of people are thinking like that now. So that's kind of why my thesis of if interest rates really do start to accelerate to the downside, which they are, right? A 30-year fixed rate mortgage is in the 5s now. Maybe people will put their stuff on sale. Mark Summers, it still seems like sellers are holding their breath and buyers are still sitting on the sidelines. Bree Graham says, yeah, when should I sell my house in Phoenix and head to Miami? Do it now. That is if you like Miami, if you like the... I just lost a comment I wanted to read. Someone was talking about that Yale professor that was freaking out on CNBC, and I I was like, it was crazy watching that live. It was ridiculous. Jackass, just remember the professor on Monday calling for 75 basis points of emergency cuts. That's not even a real take. That's just a ridiculous take. And I'm not, I respect the professor. He's a really, really smart guy, but that's just a ridiculous take. If anything, and not to sound redundant on this topic, but humans are emotional creatures, if you haven't noticed, okay? If you haven't noticed, humans are so emotional, myself included. I'm not exempt from this. The number one thing that the market, when I say market, it's just a conglomerate of people, right? People are market participants. I'm a market participant, you're a market participant. They want stability, they want normalcy. So if you have, these headlines banging and buzzing off the rails, CNBC, Nikkei has its worst day in history. The Federal Reserve in the United States cuts interest rates 75 basis points on an emergency rate cut. That's going to freak people out, okay, and cause more panic. So I think that's a really, really bad take. And believe it or not, stock market flash crashes happen. They happen all the time. It's not abnormal at all. Things unwind, pressure has to be released, people blow up, firms blow up, and the market goes back to normal. That is the free market at work. Stephen F says SOM rule. Been talking about it a lot. That is very, very accurate, and that is possible. That it is very possible that is an indication of a recession. But let's just say let's play devil's advocate, because it's good to kind of play both sides. Even if we do, right, have a recession, that doesn't mean the end of the world. I feel as if the financial media has trained people to think that if we have a recession, it's like, the government's going to come around and kill your dog or something like that. It's just 2 quarters of negative GDP growth. Okay, people survive. Okay, and that doesn't even necessarily mean the market needs to go down big in a major way. We could have a recession, a mild recession. And generally speaking, things will be fine. That is also a possibility. Hey, Trade Brigade, good to see you. And maybe I'll see you on your stream tomorrow, live. If you guys want to watch a very entertaining and good pre-market live stream, maybe join Trade Brigade over there. I'm in there from time to time. I usually have it up at the office. I'm in the chat sometimes. It's good pre-market recap. Here we are at Vernadoville. Let's see if we can see the Empire State Building. Maybe too. It is too foggy. I was going to show you the Empire State Building, but you can't even see it. Wow, JC's is looking forward to the Elon Musk Trump interview. It's on Monday. I didn't even know that. Where's it going to be, JC? Who's doing the interview? I'm surprised I didn't hear about that. Is Elon interviewing Trump? Man, that's going to be a wild one. Elon Musk interviewing Trump. Huh. JC says Elon will be doing it and it will be hosted on Twitter Spaces. Wow. Yeah, I'm game for that. I'm down to watch that. I mean, regardless of what side of the aisle you're on, Democrat or Republican, that interview is going to be crazy. Flat Smack says, I bet they talk about Bitcoin. Yeah, Trump has been pretty much forced to take the side of a pro-Bitcoin stance. And by the way, I actually think, and I don't get political, but I think Trump is BSing on his Bitcoin stance. But it doesn't matter. He's forced to say that he believes in it. But deep down, I think Trump still thinks that Bitcoin is nonsense. But he's a politician now. He wants to win an election. And it's crazy to think that, and I think I mentioned this before, I remember in 2014, 2015, everyone thought just Bitcoin was a gimmicky thing. It was a scam. It's fake internet money. And now it's literally the deciding policy factor to win a U.S. presidential election. How unbelievable is that? That's freaking unreal. For anyone who's been involved in Bitcoin since 2014, 2015, to see what it's grown into now is just unreal. It's quite literally one of the forefront talking points for the U.S. presidential election. It's unreal. That superseded my wild expectations for it. It's unreal. Steve has agreed. Trump is playing politics, still believes in old money. No, for sure. And when I realized that, it was when he spoke at the Bitcoin conference. And again, this is just my honest take. He's going to be a pro-Bitcoin president if he gets elected, but deep down he doesn't believe in it. I could just tell. I don't even think he's taken the time to really fully understand it. I think he's just delegating, which is actually good, right? You don't need to be an expert on everything. You could find smart people and delegate those tasks. But if you watch the stark contrast between RFK Jr.'s speech at the Bitcoin conference in Nashville, Tennessee, and then you play Donald Trump's speech at the Bitcoin conference in Nashville, it's like the biggest takeaway is, okay, RFK Jr. did his homework. He understands what Bitcoin is. He understands the value proposition. He understands why sound money is so important. And Trump was just like kind of regurgitating the Trump, it's Trump. He's just regurgitating the Trump talking points. Where if Kamala's elected, she's going to take your Bitcoin. There's going to be no Bitcoin, and talking about the border. He really didn't even speak about Bitcoin. He's just like, I'm going to be so pro-Bitcoin, which, look, I get it. I appreciate it. But you can kind of tell he doesn't really know anything about it, to be honest, which may not matter because you could delegate that stuff. JC says RFK understands Bitcoin. He does. He definitely does. Guys, to give you an idea of how crazy cloudy it is, you can't even see any of the Empire State Building. It's like it's gone. That's insane. NBA Elias says Trump should say, mine, baby, mine. It's hilarious. I'm actually starting to get a little bit of seasonal depression. We haven't seen the sun in 3 days. Shrek says, Tom, in your market analysis, do you balance technicals and fundamentals, or do you lean one way or the other? Well, it's interesting because usually the fundamentals will always corroborate with the technicals. So what do I mean by that? If you find a company, right, that's a really, really good company, they're growing earnings at 25% plus quarter over quarter, they're growing revenue at 25% plus quarter over quarter, they have expanding pre-tax and after-tax margins, and they have high return on equity, well, then if you then go backwards and look at the stock chart, well, the chart is probably unlikely that it's going to be trading near 52-week lows. If anything, that stock will probably be trading near 52-week highs. So technicals are very, very important, but fundamentals always come first. But I always say there's a reason, and this is kind of how I was taught, there's a reason why some charts look so perfect. You ever pull up a stock chart and you look at it and you're just like, wow, that thing just looks so perfect. It's so symmetrical, it's so tight. It's coming out of its bases in a nice stair-stepping pattern. That's all institutional accumulation. And that means the stock is very liquid, right? If you look at a long-term chart of NVIDIA, look at a long-term chart of Alphabet, any of the big winners, right? Any of the big winners, generally speaking, they trade very nicely. A lot of the nonsense junk will trade very whippy, and it's just, you can't trade something like that. If you look at a failing company, or like a penny stock, they're not trendy. It's very jagged and rigid, and that is a sign of a few things, right? Obviously, no earnings, no sales, but also no liquidity. When you have no liquidity in a name, it's very whippy and gappy, and you can't really buy something like that. So that's kind of how I view things. So if a company meets my parameters, right, of revenue growth, earnings growth, pre-tax, after-tax margins, return on equity, usually most times when you look at the stock chart, it looks very symmetrical and very, very nice. So hopefully that answers your question. Speaking of a company that's not doing too well, this is Peloton. Stephen F. says, hey Tom, is Penn Station still full of homeless? It was real unfortunate when I lived there. Now, to be honest, the city's actually done a pretty good job with cleaning up Penn Station. I've posted a few standalone walking tours of Penn Station, and they've really done a good job with cleaning it up. I would say 8th Avenue and 33rd Street, like right behind Madison Square Garden, that's where things are still a little bit kind of sketchy. But it's not as bad as it used to be. Not as bad as it used to be. That's my honest take. Where a lot of the homeless and the drugs have migrated to is 8th Avenue between 36th Street and 42nd. Maybe even a little bit past the Port Authority. I would say just up to the Row Hotel. That's kind of where the hot spot is. But look, I think we could thank our good friends over at Vornado for making Penn Station quite nice. So we're now headed over to the Hudson Yards. But if you guys enjoy the financial topics that we talk about, we also write a free investing newsletter. And if you'd like to subscribe to that, let me see if I don't know if I have my QR code. We'll try this one. Does this one work? If you scan that QR code and punch in your email, it'll bring you to our Substack, where we publish all of our equity research every other Thursday, right when the market closes. Hey, Jason Francis, what's up? Out and about. JC's server cannot be found. This may be my old one. I think that's my old one. Look at this lime green, whatever it's called. Urus? Oris? Urus? Something like that? Wow, the LT Prods is amazing. Shark Tank is having a 16th season. Talk about brand success. Wow. You know what was a good interview, the LT Prod, that I watched the other day? It was a conversation on X between presidential candidate Vivek Ramaswamy and Mark Cuban. It was very, very good. It was a very interesting topic. Check it out. If anyone's interested in, biotech business in general, that was a really interesting conversation. This is now 10th Avenue. And this is BlackRock, 50 Hudson Yards. This is BlackRock's new headquarters, and I think they just signed additional square footage. Hustler Inc. says Vivek Ramaswamy is an amazing dude, best public speaker I've seen. Oh, for sure. He's up there. He's up there for sure. His technique is very, very good. And you don't even need to like his politics. We're just talking about the technique of communication, public speaking, tonality. He's really mastered I would say, the art of tonality. You ever listen to someone talk and it's, you're kind of like lulled to sleep? He is a master of persuasion and tonality, for sure. Now, on the other side of the aisle, who's a very, very good public speaker. So if you're like, I would say if you are in college or if you're in high school and you're preparing for interviews, for internships, right? One of the most important things that I would say, even above like knowing your craft, so let's say you want to get an internship in finance, right? Even more important than actually knowing about finance is being an effective communicator in that interview. Can you make eye contact? Can you overcome objections? Can you reframe, right? Because oftentimes in interviews, the interviewer will try to throw you off, right? They'll point to something on your resume and say, we're really looking for someone who has this experience, so I don't think you're gonna be a good fit, right? They say that on purpose because they're looking to see if you can overcome that objection and reframe the conversation and not just melt in your chair, right? So I would say on the other side of the aisle, who's probably the most persuasive, very good with tonality, is former President Barack Obama. Very good with that. So if you're interested in public speaking, I would just watch and rewatch old, State of the Union addresses from Barack Obama. I would watch a lot of stuff from Vivek. He's very, very good. This is the Hudson Yards now. But that's a big one. As it relates to interviewing, oftentimes interviewers will just point to any random thing on the resume and say, you don't have this experience. We're really looking for a candidate with, XYZ experience. So, we don't think this will be a good fit. And they try to be very blunt and abrupt to see if you can actually reframe that overcome it and give a cogent reason why that you would be prepared and the best candidate for the job. You'd be surprised. Many people are just like, oh, okay, and they accept it, like, okay, thanks so much. Appreciate your time. This is the vessel at the Hudson Yards. You can't even see the top of the Equinox Hotel. Hey, Hawaii, what's up? Hawaii says they're gonna open the vessel soon. Yeah, they are, which is gonna be great. Let's see what they're doing. Looks like they're roping the entire thing off for some reason. Maybe they're setting up for some type of concert or watch party. Oh, Zin. Isn't that new dim sum place that just opened? I feel like it is. There's a really nice pool on top of that roof. Let's see if we can go get a better shot over here. Now the Hudson Yards is all due to Related. This is 20 Hudson Yards, the shops. The Related group did a really, really good job here. This building is the shed. This actually can retract. Pretty soon, before you know, we're going to be getting ready for Thanksgiving. It's going to be wild. I was walking in Central Park yesterday, and I actually posted this on X. I was like, it smells like the fall. You know how you could actually smell autumn? Well, that's how it was in Central Park, for anyone who was wondering yesterday. It was cold. It was like legit cold. It was like 68 degrees. It was windy. It was rainy. It was wild. All right, check this view out. Isn't this cool? This is a super unique view of the vessel. And this is the shed. Shriek. This is Tom, honest question. What would you attribute to you being wise beyond your years, especially when it comes to the markets? Well, I don't think I'm wise. I appreciate the compliment, but I don't think I'm wise beyond my years. But thank you for being so kind. Ah, this is that pickleball thing. So SAP, L'Oreal, and Boston Consulting Group is here. Anyone in the audience play pickleball? Hey, Sharon James, I'm going to email you tomorrow. I allocated some time in the schedule, and we'll connect and we'll do it. So, Alex 77 says I played in high school and I hated it. Well, it's a low impact sport, so I think it's good for older people. Not like seniors. I'm talking about like, you know, people out of college and middle-aged. It's very, very good cardio, but low impact. So you're not destroying your joints. Which is one thing I've done, by the way. My joints, particularly my knees, I went to a doctor's appointment once when I was in college, and the doctor was like, dude, you don't have like any cartilage left in your knees just from playing soccer so much. He's like, you gotta chill because you're gonna have severe arthritis when you're older. So I try not to do high impact stuff anymore. All right, let's do one lap around the vessel here. But as you can see, it's literally on wheels. How unique is that? So this is the track that the building will ride on. Isn't that wild? And it can go all the way out to here. Brian says, I can't either. I am a disabled veteran and don't need any more surgeries. Well, thank you for your service, by the way. I think first and foremost, we appreciate your service. So thank you very much. And secondly, I agree. Surgeries are terrible, terrible, terrible. So Bob's, why do your knees always go first? I don't know. When I was growing up, I did a ton of like heavy sprinting and like stop and go stuff, like cutting, like zigzag cutting and like agility stuff. And I did it on concrete, which probably wasn't the best idea. If you do it on grass, it's fine, but in the US, particularly if you're playing soccer, a lot of times we have this very tough artificial turf. And if you remember from the Copa America, I think some of the big teams that actually like really know how to play soccer, like Argentina, were complaining how the fields were so horrible in the US. They're like, we can't play on artificial turf, it's ridiculous. We have to play on real grass. In America, for those of you who are not from the United States, maybe you're from Europe, maybe you're watching from Argentina, you probably grew up playing sports on like real grass. Here, particularly if you're in an urban environment, a lot of times we play on artificial turf, which is not good. A lot of times, particularly if it gets a lot like worn down, it becomes very hard, almost like concrete. How's the audio, by the way, on this live stream? We do have the microphone, so the wind noise should be reduced. In the distance here, you see the Jacob Javits Center. Audio is good. That's good. I finally got a mic, so we won't have to deal with any of the crazy wind anymore. I'll take you guys to the main entrance of the Equinox Hotel. This is a 5-star hotel and it's expensive too. If you Google it, I believe the room rates start at $800 a night. This is a unique shot of the vessel from the west side. Look at this guy in his Husky. So you see the valet. Anyone ever stay here? I've never stayed here. These are the residences, I believe, on this side. Okay, let's cross and we'll check it out. This is 35 Hudson Yards. And then once we make this left, that's the main entrance to the Equinox. The only problem over here is it's so windy. You can't really tell now because I have the microphone, but the wind is insane even right now. You can maybe tell a little bit by looking at the plants, but this is probably 15-mile-an-hour winds right now. It's insane. I'd say they're very strategically located though, because you have BlackRock at 50 Hudson Yards, which is right here. So whenever they have corporate events or corporate meetings, all the executives can just stay here. You just walk right across the street. It's quite the busy night too. Hey, Mark Goodkin says, I'm a member of Equinox Fitness. Now, do you think it's worth it, the Equinox membership? I know it's a little bit more pricey than some of the other gyms, but you think it's worth it for the price? Everything in Miami says, and Blade transfers to the airport is close. Oh, that's true. Yeah, the Blade, you're right. The helicopter Blade is like right over here. How much is Equinox, by the way? $300 a month? Something? Mark says, yes, it's worth it if you use it a few times a week. Oh, $225 a month. I'm sure the Equinox at the Hudson Yards is worth it. I think my next place in New York City, I really got to get a place that has a gym in the building, because I know myself, and I never, ever, ever make it to the gym. It's just, I know it's an excuse. I understand that. But if I'm not in Miami, no way in hell I'm going to be able to make it to the gym. In Miami, I just go to the beach. I use the pull-up bars. I do dips, pull-ups. But in New York, no way, because the gyms are so crowded. I got to have a gym in my building, so that's going to be the next thing on my list. Hey, bottomless coffee says $300 a month for a gym is highway robbery. When other commercial gyms are around $50. I guess it just depends on what they offer. And also, you know, some people could even, it may sound weird, but could even use it as like a networking thing too. I mean, if you go to an Equinox at 5 a.m., there's probably gonna be some pretty high level people there. This is the brand new Hudson Yards station, 34th Street, Hudson Yards, 7 train. This is the last stop on the 7 train, and the last stop on the other side of 7 train is in Queens, Flushing Main Street, which I would highly suggest going to because it is the largest Chinatown in New York. A lot of people think the largest Chinatown in New York is in Manhattan. It's not, it's in Queens, Flushing Main Street, and it's awesome. Look at how beautiful the artwork is in the lobby here. In addition, sometimes your employer will give you a stipend for a gym membership in New York. So if you work at a company, oftentimes you could ask them to pay for your gym membership. All right, let's head back. Look at how unique this staircase is. Isn't that incredible? It almost looks like futuristic. On each little platform, they have little tables and chairs for people to kind of congregate and sit. We met the architect here. This was almost 2 years ago now. We just ran into him on the street. His wife came up to me and she's like, "What are you filming?" I'm like, "I'm filming the lobby because it looks so great." And he's like, "Oh, my husband designed the whole thing." And we did like an impromptu interview with the guy. Oh man, that wind is nuts. That's the only reason why I would never live in the Hudson Yards. Even if I had a really, really nice apartment, I just can't live this far over. It's too windy. It's too far. Mark, thanks for joining. Have a wonderful Friday. Finish the week strong. We'll see you soon. There's a coffee shop tucked away right here. Black Fox Coffee. It's very good. It's one of my favorite spots in the city. They have a location right across the street from my office.
You see the, I don't know, the ice cream field there?
Hey, CAB chat around Bogota. What's up? It's good to see you. Long time no see as well. Hopefully you've been well. Thanks for joining us. Here's the entrance. It's a smaller location, but it's quite nice. right here, open from 7 to 5 p.m.
No, I actually met some really
This is usually a pretty unique view of the Empire, but we can't even see it tonight. Alex 77. Hope you're well. This is where I got my mic, by the way. I get all my stuff right at B&H. Professor Darío says your mic is very good. Professor, what were those settings you were talking about? You were recommending I adjust a few of the settings. If you could send me an email, I'd be quite interested. Maybe some of the settings to let in more of the background noise or something like that. I feel as if it's okay blocking the wind, buffer in the mic, but maybe to adjust some of the settings to let in a little bit more of the, maybe just the overall, I guess you could call it the white noise of the city. CB says, what time do you go to sleep? Depends. Usually around maybe 1 o'clock in the morning sometimes. Sometimes earlier, sometimes later. Hey, what's up, Arjan? Says, do we ever stream Central Park? Yeah. Indeed we do. But speaking of sleep, I must go to get some sleep. And I promise, okay, we will start the stream on time tomorrow. So let's plan on starting the broadcast on time at 8:45 tomorrow from Soho, and we will head over the Manhattan Bridge. Because tomorrow, all of this nasty rain is supposed to be out of here, please God. I haven't seen the sun in 3 days. So let's all meet back in Soho. What do you think? Everyone down with that? Soho 8:45. Well, thank you all for joining us. I appreciate it. It's always a pleasure chatting with all of you each night. If you enjoyed the stream, feel free to leave a like on the video, subscribe to the channel if you're new, and enjoy your Friday. And we'll see you guys tomorrow. So Esmeralda, appreciate it. Stracker, Alan, Oh, look at this. That's a dangerous spot. This truck pretty much jackknifed that Tesla. Yikes. Cash, Ali, Star, all of our moderators, Sharon, everything in Miami, Jay, Austin City Limits, Molly, Cynthia Ava, Brian, Mark Summers, Stephen Bate, Alan, Esmeralda, Darrell, Shannon, Alex 77, Joseph Hardaway, Stephen F., Professor, Dario, James Farley, Ivan, Out and About, New England Crypto. We'll see you guys soon.